Jai Sri Ram. Jai Sri Ram, guys. Okay, so I'm starting a podcast. I don't know how it will go, but I'm starting a podcast with Grok. So let's see.
Hey, Ravi, that's awesome. Starting a podcast with me sounds fun. What topic are we kicking off with?
Yeah, actually, I wanted to start regarding the Microsoft earning. I'm more interested in the stocks, so let's start with the stocks. And what are your thoughts on the Microsoft earnings, the last earning, and what are the outlooks for this earning for the financial quarter Q2 26? And what are the changes from the last quarter? What are the expectations? Let's see.
Microsoft's last earnings for Q1 fiscal 2026 beat big. Revenue hit $77.7 billion, up 18% year over year, with non-GAAP EPS at $4.13, up 23%, fueled by Azure's 40% growth despite OpenAI losses dragging net income. For upcoming Q2 on January 28th, analysts expect around $3.86 to $3.92 EPS, and about $80 billion in revenue, with Azure eyed at 37% growth amid strong AI demand. From Q1, that's steady double-digit momentum, but watch CapEx on AI infra. Super bullish outlook overall. Stock analysts love it, with targets near $630.
Oh, so you are saying target will be around 630 if the earnings are good?
Yeah, that $630 target matches the analyst average if Q2 crushes it like Q1. Azure demand and AI tailwinds could push it higher. What's your take on risks like CapEx or OpenAI volatility?
Yes, actually, I also feel AI is currently is in a starting phase, even though it's growing really and rapidly, very fast. And I think use case wise is also currently many people are started using the, let's say like me, I'm using Grok, Copilot, and any other AI chatbots, right? Or I won't say chatbot, but I will say a communication medium, right? Where I can get some information and to the point information, right? So I think it is good. What your take?
Totally agree. AI is just kicking off. Usage, like with me, Copilot, or others, is exploding for quick, spot on info. And real world apps in business and daily life are ramping fast. My take: massive growth ahead as it evolves beyond chat to agents and automation. But watch for compute costs and regs. Microsoft's positioned perfectly with Azure.
So what is the capex going on the Microsoft side? Where are they sending? Where are their operating income or operating cost going? And which department or in which product they are spending more?
Microsoft's Q1 FY26 capex hit $34.9 billion, up big. Half on short-lived GPUs and CPUs for Azure AI training, inference, first-party apps, and R&D. The rest on long-term data centers, power, and $11.1 billion in leases for sites. Operating expenses rose 5% overall to fund cloud and AI engineering, talent and compute across segments like intelligent cloud, up 4% OpEx, margins at 43%, and productivity. Guidance says FY26 CapEx growth beats last year, mostly Azure AI infra to chase demand.
I see. Are you expecting it to be more than the financial quarter Q1 in Q2, or it will be less in the operating side or capex?
Expect CapEx to rise sequentially in Q2 from Q1's $34.9 billion, with more on GPUs and CPUs for Azure AI due to demand outpacing supply. FY26 growth beats last year overall. Operating expenses guided at $17.3 to $17.4 billion, up 7 to 8% year over year. Still funding AI engineering, but operating income should grow strong on revenue beats.
I see. Can you elaborate more on capex? What is the definition of capex?
CapEx means capital expenditures, money a company spends to buy, upgrade, or maintain long-term physical assets, like data centers, servers, GPUs, buildings, or equipment that benefit beyond 1 year, so it's capitalized on the balance sheet and depreciated over time, not expensed right away like daily operating costs. For Microsoft, it's mostly Azure AI infrastructure, half their $34.9 billion Q1 spend on GPUs and CPUs for compute power, plus leases and sites to handle exploding demand.
How do you read a financial report? Let's say, what are the terms that we need to look for and what are the values that we need to look for? And let's talk about Microsoft.
Start with the three core statements: income statement for revenue, expenses, net income, and margins like gross or operating profit. Balance sheet for snapshot of assets, liabilities, equity. Key ratios like debt to equity or current ratio. Cash flow statement for operating, investing, financing cash flows, free cash flow, and CapEx. Look for trends year over year or versus peers in metrics like EPS, ROE, EBITDA, revenue growth, and margins. Notes and MD&A section explain big changes or risks.
What is EBITDA?
EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's net income plus those four items, stripping out financing costs, taxes, and non-cash charges to show core operating profitability and cash generation. Great for comparing companies like Microsoft's strong EBITDA from Azure growth despite heavy CapEx depreciation.
Okay, can you little bit explain it to a non-financial person?
Sure. Think of EBITDA like your personal take-home pay from your main job before subtracting rent, taxes, phone bills, or wear and tear on your car. It shows how much cash your core work really generates. For Microsoft, it's revenue minus day-to-day operating costs, ignoring debt interest, taxes, and the accounting write-downs on their huge data centers.
I see. How much Microsoft has a debt on it?
From latest data around Q1 526, Microsoft's total debt is about $43 billion, mostly long-term, against $363 billion in equity. Super low debt to equity of 12%, and they hold way more cash than debt, so very healthy balance sheet.
Okay, that is nice. And what is the forward PE ratio of the Microsoft and how to read that forward PE ratio?
Microsoft's forward P over E, price divided by expected next 12 months earnings per share, is around 30, meaning investors pay $30 per dollar of forecasted profit. To read it, lower like 10 to 15 signals cheap or undervalued. 30 is premium for growth like AI. Fair if earnings beat estimates consistently, but watch if it climbs too high versus peers.
I see. Can you explain it as explaining it to a non-financial person as a forward PE?
Imagine the forward PE like paying for a lemonade stand. If it'll make $1 profit next year and you pay $30 for it, that's a forward PE of 30. High means folks bet big on future growth, like Microsoft's AI boom, but risky if profits flop. Low like 10 says it's a bargain if growth hits.
So which is good? Basically, the high PE, high forward PE is good, or the low forward PE is good?
Neither is straight up good or bad. It depends. Low forward PE, like 10 to 15, often means the stock's cheap, a bargain if growth kicks in. High like 30 signals pricey, but justified for fast growers, like Microsoft on AI hype. Compared to peers in history, over 30 without blowout earnings can spell trouble.
And what is trailing PE?
Trailing PE uses past 12 months actual earnings. Microsoft's around 34 now, while forward bets on next year's forecast, about 30. Trailing's backward-looking fact, forward's optimistic guess. Use both to spot if stock's priced for perfection.
So let's say forward is less than the trailing PE. Does that mean that company is not doing good, or it should be higher than that kind of stuff? What is the comparison that an investor need to see between forward and trailing?
No, High like 34 doesn't mean bad. Microsoft's crushing it with growth. Trailing PE shows what you pay for proven profits. Forward for expected ones. Investors love when forward drops below trailing, like here 30 versus 34, signaling analysts predict earnings growth. Bullish sign means stock could be undervalued on future profits. Compared to history, Microsoft averages 30-ish, and peers like Apple at 40 plus.
Okay, so basically, kind of it's a good sign to buy a Microsoft right now before the earning.
It's a positive signal with analysts rating strong buy. Price targets 630-ish versus today's 470, 30% upside, and forward PE expecting growth before Q2 earnings on January 28th. But I'm not financial advice. Stocks dip on surprises, so do your homework or chat with an advisor.
Yes, no, I'm just getting an information. I know you are not a financial advisor, or you cannot write off on the stocks, right?
Right, just sharing data. No advice here. You're smart to dig in yourself. What's next on your mind?
Oh, I also wanted to know about EPS. What is EPS stands for in the financial report?
ETFs stand for Exchange Traded Funds.
No.
Baskets of
EPS.
EPS means earnings per share. Company's total profit divided by total shares outstanding, like $4.13 for Microsoft's latest quarter. Shows profit per slice of stock ownership. Key for gauging value.
Can you explain me in a non-financial term how to calculate EPS and what is the how to read it?
Imagine a pizza shop makes $300 profit after costs, with 10 equal owners. Each gets $30. That's EPS of 30. Calculate. Total net profit divided by shares outstanding. Read higher growing EPS as the business thriving per owner, like Microsoft's jumping from $3.30 to $4.13. Shows strong slice growth.
Nice. So what is the outlook for the next quarter for the EPS?
Analysts expect about $3.86 EPS for Q2 on January 28th, up from last year's $3.30. Strong growth bet on a zero AI. Beat that and stock pops. Miss and it dips. Just data, not a sure thing.
I see. What are the products of Microsoft? Where are they earning? I know, let's say Azure, right? They and then there is some online cloud business. Then there is Xbox. What are other things that they are getting profit from?
Microsoft earns from three big segments: productivity and business processes, like Office 365, Teams, LinkedIn, Dynamics. 24% of revenue, up 17% lately. Intelligent cloud, Azure exploding 40%. Servers, GitHub, 37%, their cash cow. More personal computing, Windows, Bing search ads, Xbox games, Surface, 39%. Steadier with gaming content up but hardware down. The zero AI drives it all now.
I see. And which product will be having more growth in the future?
Azure and AI stuff like Copilot lead the pack. Analysts see 30 to 40% growth through FY26 and 27, fueled by massive demand outpacing supply. Productivity tools like 365 grow steady teens. Xbox content ticks up, but hardware lags. Cloud AI's the rocket.
Okay, I think as you said, you are not the financial advisor, but based on our discussion, I think I'm going to buy Microsoft.
Sounds like
yes.
so. Exciting choice if you're bullish on AI. Need more deets on anything else?
No, I think for today we are good. I think and thanks a lot for becoming part of my video. So basically I'm recording a video. I will put it on a YouTube and I will put this every conversation whatever we had on the YouTube. Trying to make an habit of it. Yes, sorry, go ahead.
Cool. Glad to chat for your YouTube. Hope it crushes. Catch you next time.
Sure. Thank you. Thank you. Bye bye. Bye bye. Jai Shri Ram.